Greetings, everybody. Happy Friday. Hope everyone's having a good day out there in the interwebs. It's another beautiful but sort of warm day here in Colorado. Not as hot as yesterday, but got lots of sunshine and a few clouds out there, but not too bad. Hope it's nice wherever you're at. If you're in Texas, you're probably sweating your nuts off right now. Sorry. But at least you have air conditioning, which this house doesn't. So anyways, it's nice and cool down here in my office. All right. Not the best day in the markets. Lots of red. The markets, they started out pretty good today, but unfortunately fell mostly into the red by the closing bell just a few minutes ago. So anyways, if it's your first time watching a Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, click on the likes, the shares, subscribes, all that good stuff. Please do that and give me some thumbs up. I'd really appreciate it. All right, let's go ahead and jump into the numbers for today. Dow Jones was up 0.34%, 115 points, closed at 34,510. That's the bright spot here in the Americas. S&P 500 was flat, down 0.06, closed at 4507. NASDAQ was down 0.18, closed at 14,113. VIX fell 2.79% today. It's down to 1323. Canada was down 0.08, Brazil down 1.3, and Mexico was down 0.93. Over in Europe, Germany was down 0.22, the UK was down 0.08, France was up 0.06, Netherlands was up 0.53, let's see here, Spain down 0.43, Italy down 0.39, Switzerland up 0.8, and Portugal down 0.49. Both Russian exchanges in the green, MOEX up 0.59, RTSI up 0.6. And the overnights in Asia, the Nikkei in Japan was flat, down 0.09. Australia was up 0.78, New Zealand up 0.18. In China, the Shanghai was flat at up 0.04, the Shenzhen component down 0.14, China A50 up 0.08, DJ Shanghai down 0.02, and the Hang Seng up 0.33, and the Taiwan weighted up 2.28%. So it looks like the Asian markets, well, at least the Chinese markets were pretty flat, 0.04, 0.14, 0.08, 0.02. So other than the Hang Seng, which was up a third, everything else was fairly flat. All righty, let's go ahead and jump over to the see how the markets did for the week. This is the Dow Jones. It's going to finish the week off up about 2.36%. The S&P 500 up about 2.44%. NASDAQ, where's the line? There it is. Let's see. Looks like the NASDAQ was up 3.45%. The Dow Transport's going to finish the week off up 1.64%. And the Dow Utilities finished the week off up 2.46. So looks like most of the U.S. indexes were up about 2 to 3%. So not too bad for the week. I think a lot of that has to do with the hope that the Fed is going to come to an end on their Fed rate increases. Let's go out here and take a look and see the trend. Here's the Dow Jones, beginning with the downward trend starting January 4th of 22. Broke through the trend in around late October, early November last year, and has just been trading sideways. Same thing with the S&P 500. Broke through the trend early January, traded sideways for a while, was up on the hopes that the Fed wasn't going to raise rates, but at the last meeting, they talked about 2 more rate hikes, one here in July and then one in September, and the markets have been kind of sideways since then. So all right, so that's what's going on in the stock markets. Let's go ahead and get to the economic data that came out this week. Jobless claims, initial jobless claims came in at 237,000. Forecast was 250. Last week's number was 249, so dropped by 12,000. Continuing claims came in at 1.729 million. Forecast was 1.723, so only 6,000 over forecast. Not too bad. The Consumer Price Index came out on Wednesday. It came in at a 3% number. Forecast was 3.1. Last month's number was a 4%. So as you can see here on the chart, we had spiked up here. What was the peak? That was July of last year at 9.1 and slowly been trending down. If you were watching the Wednesday broadcast, I totaled up all of the inflation that is Basically, since the 2 months of negative inflation that we had after the whole COVID thing started, I think it was about 17.2% as far as total inflation that we have seen if we were to start here and then move forward and total up all those months. All right. Consumer price index month over month only grew at 0.2%. Forecast was 0.3%. So what I had done is just totaled up, from these last, what was that? The first positive month we had was July. So 3 years ago this month was the first month we had positive inflation again after COVID. And so like I said, totaling all those up right here is about 17 total percent. Granted, some things are higher, like gas and food and things like that. The producer price index came out yesterday, grew by 0.1%. The forecast was 0.4%. So again, we peaked out, looks like in April and August of last year on producer prices. And as those have actually been receding much, much quicker. The month over month number also grew by only 0.1%. Forecast was 0.2% on the producer price index. And consumer sentiment this month came in at 72.6. Forecast was 65.5. Last month's number was 64.4. So that's a pretty significant jump. It seems that consumers are in a little bit better spirits. Not sure why. I mean, we still have all the same problems that we had several months ago, but hey, people are in a better mood. All right. Market recap, S&P 500 off highs on Citigroup slip as major Wall Street banks kick off earnings. The S&P 500 experienced mixed results on Friday with financials facing pressure due to Citigroup's disappointing earnings, while other sectors saw gains. JP Morgan Chase and Wells Fargo delivered better than expected quarterly results, with both banks beating estimates on the top and bottom lines. However, their shares retreated from session highs as they increased provisions for bad loans and anticipated further declines in consumer deposits. Citigroup, on the other hand, fell more than 3% as its earnings fell short of Wall Street expectations, primarily due to weakness in its investment banking business. The lack of rebound in investment banking disappointed investors and led to the decline in Citigroup stock. State Street also faced a decline, plunging more than 10% as its quarterly revenue fell short of estimates. The drop in net interest income, coupled with a decrease in deposits, contributed to the disappointing results. Healthcare stocks performed well, with United Health Group surging over 7% after reporting second quarter results that exceeded expectations. The health insurer raised its outlook on full year profit, citing cost cuts as a driving factor. Eli Lilly announced in its agreement to acquire obesity drug maker Versanis for up to $1.9 billion, aiming to increase its share in the weight loss drug market. See, there's an easy thing. It doesn't cost you a dime. It's called fasting. It's where you don't put all the sugary food in your mouth. Helps you lose weight. It's amazing. All right. Consumer stocks in the home building sector, including D.R. Horton, PulteGroup, and Lennar, experienced gains. Wall Street expressed optimism about the sector, expecting a continuation of the pickup in home building activity. That has a lot to do with interest rates, too. Amazon and Tesla also contributed to the rise in consumer stocks, with both companies seeing gains of more than 1%. In the technology sector, Microsoft outperformed as UBS upgraded its rating on the stock to buy from hold. The upgrade was based on the expectations for a boost from artificial intelligence and an improving demand for cloud services. While financials faced some setbacks due to Citigroup's earnings miss, other sectors such as healthcare, consumer stocks, and Microsoft performed well, driving mixed results in the overall market. All right, so not all bad news out there. Now to some bad news. Last article up, it's titled Endgame, the U.S. federal debt interest payments about to hit $1 trillion. This comes to us from Zero Hedge. All right, let's go ahead and read through a summary of this. The latest U.S. budget deficit report revealed concerning numbers indicating that the country is on a fast track to fiscal instability. I know, shocking. In June, government outlays surged by 15% to $646 billion, while tax receipts slumped 9.2% to $418 billion. As a result, the budget deficit nearly tripled from $89 billion to $228 billion compared to its previous year, exceeding the consensus estimate of $175 billion. The cumulative deficit for the first 9 months of the fiscal year is already the third highest on record, reaching $1.393 trillion, a 170% increase from the same period last year. What's truly shocking shocking, however, was the record $652 billion in gross debt interest accumulated in the current fiscal year, up more than 25% from previous year's interest expense of $521 billion. Soaring interest rates, driven by the Federal Reserve's attempt to undo its policy failure of keeping rates at zero for too long while injecting trillions into asset bubbles, have been a key driver of the deficit. As the Fed raises its benchmark rate, the Treasury faces increasing rates on outstanding debt, leading to a rise in interest payments. If interest rates continue to rise and the blended rate on the debt surpasses 4% within a year, it could be disastrous for the U.S., with total U.S. debt at 32.3 trillion. Interest payments could reach 1.3 trillion within 12 months, potentially becoming the largest government expenditure, surpassing Social Security. The exploding interest on U.S. government debt is likely to become a major talking point ahead of the upcoming presidential elections. Interest payments on the federal government by the federal government have already surpassed $900 billion and are expected to exceed $1 trillion within a quarter, signaling a historic benchmark that may lead to the U.S. facing a Minsky moment. Treasury Secretary Janet Yellen also downplayed the concerns about higher rates, highlighting the ratio of interest payments to GDP, adjusted for inflation, remains historically low. Yeah, this is the same moron that a year plus back was calling inflation transitory. So I wouldn't really take a whole lot she has to say with any truth. However, critics argue that GDP will decline after the next recession, while U.S. debt will continue to increase, making Yellen's argument less convincing. Overall, the U.S. is facing a challenging fiscal situation, and the endgame seems to have arrived. Well, so, I mean, it seems like, life is, still pretty good here in the United States, but unfortunately, we got a bunch of bad problems in front of us, and no one in Washington really wants to deal with it. So, in my opinion, let the government fall apart. Let us start over. I'd be happy to have a currency based on gold or silver or something else that's far more stable and can't be inflated and create all the problems we're dealing with right now. So anyways, all right. I hope everyone has a fantastic weekend. That's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful weekend, and I'll talk to you next time. Adios.